So as a quick recap, Chapter 2 introduces to us two groups of qualitative characteristics, and these groups are your fundamental qualitative characteristics and your enhancing qualitative characteristics. And under our fundamental qualitative characteristics, we have relevance and faithful representation, and that both must be possessed by an information for it to be considered useful. On the other hand, we have our enhancing qualitative characteristics, and again, our mnemonic is your VCAT. Our enhancing qualitative characteristics are your verifiability, comparability, understandability, and timeliness. And as discussed in the previous video, no amount of enhancing qualitative characteristic can elevate an information to the same level as those information that possesses relevance and faithful representation. Moving on, one of the two fundamental qualitative characteristics is your relevance. So financial information is considered to be relevant if it is capable of making a difference. The framework tells us that information is capable of making a difference if it has either predictive value or confirmatory value, or even both. Financial information has predictive value if it can be used as an input in determining future outcomes. But just to clarify, when we say that financial information should have predictive value for it to be relevant, we do not mean that information must be in the form of a prediction or a forecast. What is required is that a piece of information may be used by our financial statement users to make their own predictions or forecast. So again, an information can still be considered as possessing predictive value even though it is not in itself a prediction or a forecast, so long as it can be used by our financial statement users in coming up with their own predictions and forecasts. So if, for example, you're trying to forecast your sales or revenues in the next period, the information that you will use in making such prediction, for example, your sales revenue from the previous period, then we can consider your past sales performance as possessing predictive value, even though such information is not a prediction of the future, even though such information is actually just a reporting of what has already transpired. Second is, for an information to be considered as capable of making a difference, it must have a confirmatory value. So this is just a matter of perspective. Predictive value more of the ability to give us an idea of future outcomes. Predictive value is forward-looking, while confirmatory value is backward-looking. So if an information can be used to confirm past expectations, then such information is capable of making a difference and thus can be considered as being relevant. So again, relevance as a qualitative characteristic requires that information must be capable of making a difference. And as to when we can say an information is capable of making a difference, very simple. Such financial information must have predictive value or confirmatory value or both. I cannot emphasize enough, just having one of the two is already enough. But more often than not, information that has predictive value will also have confirmatory value. Another important concept in accounting is the concept on materiality. Materiality can actually be considered as a variation of relevance. The framework states that information is considered material if it can influence decisions. If we compare the definition of materiality with the definition of relevance, we can actually say that they are just the same. Information is relevant if it is capable of making a difference, whereas information is material if it could influence decisions. Definitely, we can say that an information that is material is also relevant. So in a sense, materiality is just a small-scale application of the fundamental qualitative characteristic of relevance. Relevance is more of a general application, whereas materiality would be an entity-specific type of relevance. It is possible that an item may be material to one entity, but not material to another entity. For example, a 10,000 loss may be considered as material for a small company, while it may be considered as immaterial for a large company. So existing investors of the small company would definitely be worried of a 10,000 loss, Whereas investors of a big company will not be worried of a 10,000 loss. And as such, the 10,000 loss may not be relevant for the investors of a big company but relevant for the investors of a small company. The second fundamental qualitative characteristic is your faithful representation. So aside from being relevant, an information will be considered as useful if it will faithfully represent the substance of the phenomenon or transaction or event that it purports to represent. So for example, a company reports a cash outflow of 10 million pesos. Definitely that amount would be considered as material and therefore relevant for most companies. But it was reported by the company as a legitimate expense when in fact the 10 million pesos was actually a bribe so that the company will receive favors. If you are an investor, definitely you would want to know that the company is engaged in shady transactions. You would not want to invest in a company that is involved in illegal transactions. But since it was reported as a legitimate expense, then the information fails to become useful on the part of your potential investor. And that is exactly the problem if financial information does not faithfully represent the transactions that it purports to represent. Information will become misleading. And as such, your financial statement users, your primary users, your decision makers would be misled. Definitely, the board does not desire for financial reports to produce misleading information. So when then can we say that if financial information faithfully represents what it purports to represent? There are three elements for faithful representation, and they are completeness, neutrality, and freedom from error. An information is considered to be a faithful representation of the real transaction if it is complete, if it is neutral, and it is free from error. Now, this is another possible source for multiple choice question. You would be asked which of the following is not an element of faithful representation. And you can expect that 3 out of the 4 choices would contain completeness, neutrality, and freedom from error. If you just remember the 3, then identifying the odd choice would be very easy. The problem is students would not take the time to actually remember this by heart, and they would just opt to figure out the answer during the examination already. They would think that the odd choice would be very obvious, but that is not always the case. For example, a common way of making the question confusing is just by using another term that is also mentioned in the framework. If I were the one making the question, my fourth choice would be that freedom from bias. Your choices would be A, completeness, B, neutrality, C, freedom from bias, and D, freedom from error. You would think that perhaps it's between freedom from error or freedom from bias. But you will find a hard time concluding that the answer you're looking for is freedom from bias, because if you say that freedom from bias is not an element of faithful representation, then basically it would be wrong to say also that neutrality is an element of faithful representation, because freedom from bias is essentially similar to neutrality. And this is where mastery becomes very important. If you simply knew that the elements are completeness, neutrality, and freedom from error, then there would have been no need for you to analyze the choices. And these are the type of questions that should not consume your time during the examinations or even in the board exams. You should be able to quickly identify that the odd choice is your freedom from bias. You can actually justify why all the choices can be considered as an element of faithful representation. But the question does not require you to make arguments. The question simply asks you to recall what are the elements of faithful representation as mentioned in the framework. So it is your completeness, neutrality, and freedom from error.